The 6 hidden variables that impact your home's value. For decades, it's been believed that the number one variable that determines the value of a home is location. You've heard the adage, location, 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 suggesting that if you have the best location in town, this will reflect in the price that buyers are willing to pay. While location is an important variable in determining pricing, it is not the most important. After all, the value of the house that has the perfect location has varied dramatically over the past 20 years, suggesting that some other factor besides location is an unseen variable in predicting its value. That mysterious, elusive, unseen determiner of value is demand. That's right, demand trumps location all day, every day. This has always been the case, and it always will be. So then the question is, what variables impact demand? There are 6 hidden variables that impact demand for a property, thereby impacting the value of your home. Number 1, interest rates. Mortgage interest rates determine buyer affordability. The lower the rates, the more people who can afford a home. A bigger buyer pool increases demand, which increases the value of your home. Number 2, population. More people means more potential buyers. A bigger buyer pool increases demand, which increases the value of your home. Number 3, inventory. More available housing means lower demand for your home. A large inventory of housing available decreases the number of potential buyers per home, and demand decreases, as does the value of the home. Number 4, economic stability. Buyer pools increase when people have overall confidences that their jobs are secure and that their income, expenses, and assets will remain relatively stable into the near future. The pool of buyers decreases when people are unsure if their jobs or their living expenses may change. Number 5, the out-of-pocket cost associated with buying a home. Buyer pools increase as the out-of-pocket costs associated with buying a home decrease. In other words, there are millions of buyers each year that qualify to purchase a home based on their income stability and credit. The problem for many buyers is that historically high rental housing rates has made many potential home buyers cash poor. They would buy a house if they could afford the out-of-pocket expenses associated with the purchase. Mortgage programs assist with low 3% down payments. In addition to that, most buyers typically invest another 5% above and beyond the down payment for mortgage closing costs, buyer agent representation, and prepaid taxes and insurance. The average first-time buyer often needs 8% of the purchase price to buy a home. On a $500,000 home, that's $40,000. According to a 2023 report released by the Federal Reserve, the average life savings for Americans under the age of 35 years is $20,540. This is where demand rears its head again when it comes to your home value. There are 2 pools of buyers looking to buy a home today. Pool 1, there's one pool of buyers which can easily pay the 8% that will be the minimum all-inclusive out-of-pocket expense to buy a home. However, this is a very small pool according to the Federal Reserve, which states that the average savings is $20,540. If you're a home seller that is only looking to work with buyers in this pool, the demand is decreased because of the small buyer pool, which means the value of your home will decrease. Pool 2. The second pool is robust. We know that on average, Americans 35 years and younger have a savings of $20,540. This is usually enough to pay the down payment required by the bank. As well, it's even enough to pay a portion of the additional 5% out-of-pocket expenses for mortgage closing costs, buyer agent representation, and prepaid taxes and insurance. Sellers who offer to assist with this additional 5% create a much bigger buyer pool, and that greater demand increases the value of the property. Number 6. The final hidden variable is property exposure. This is where having a great real estate agent comes in. The pool of potential buyers is increased when buyers are aware that the property is for sale. This means the agent will work to syndicate the listing across multiple online, print, and media platforms so that potential buyers know the listing is available. Of course, the best and fastest way to do this is to expose the listing to the real estate agents in the marketplace who are currently working with the potential buyers. The seller plays an important role in this exposure because the real estate agents who are working with first-time buyers who need assistance with their out-of-pocket expenses will call the listing agent to find out if the seller is willing to assist the buyer by contributing the buyer agent's fee and/or other closing costs if a strong offer is presented. Many buyers simply cannot even consider a property if a seller is unwilling to consider contributing to out-of-pocket expenses. Hence, property exposure is a byproduct of both the skill of the listing agent and the seller's willingness to cooperate fully in the transaction through their openness to assist in a buyer's out-of-pocket expenses when buying the home. Paradoxically, a seller's offer to pay for a buyer's out-of-pocket expenses increases the demand of the property, which increases the value, suggesting that in many cases the seller sells the property more, thereby netting a higher return than if they hadn't offered to assist with a buyer's out-of-pocket expenses. The moral of the story for home sellers is this: location, location, location is not as important as demand, demand, demand. And when it comes to creating demand, a pool of many buyers with a little savings can create more value than one buyer with vast savings. Smart sellers think strategically about maximizing demand for their home because that demand maximizes value.